Okay, here we go, my friends. I'm going to give Paulie the controls here. There you go, Paulie. I'm sure you know how to use this room. Looking forward to hearing your voice and seeing what you have on your screen, partner. There he is.
Can you hear me, Dale?
Yeah, Paulie, how are you, buddy?
I'm doing pretty good. How you doing?
Good, God. It's been a year or so since I've talked to you.
Yeah,
And,
about that.
Yeah, and I was telling people, what a generous guy you are, and we've had some comments. One of them from Dan Norberg. You're one of the best scalpers around. Everyone say hi to Paulie. So your reputation precedes you. Great to have you with us. So I can't help but ask this question.
Mm-hmm.
Okay, how has it been for you? Because you're the main host on Morning Edge right now, right?
Yeah.
How has it been for you since Moses Morrow began his exodus to the promised land of ForexAnalytix? Because I know, I'm working with him now. He's an awesome presence. He's, got this hypnotic voice. He's a top drawer, Top Gun trader. How has that adjustment been for you, partner?
It's been interesting. It's been different because I came from a 1 hour show, and I had to do things a little bit differently. Also had to go on and expand the way that I looked at the markets. Because with that 1 hour show, most of my stuff was focused on super ultra short term, and I had to kind of expand that, and also had to expand some of the markets I was looking at. Like I never used to look at dollar peso. I didn't look at Kiwi. I mean, I traded Kiwi before, but so some of these other markets I was looking at and broaden my the analysis on those. So it's been different, but it's been good. It's been a learning curve, but it's been enjoyable. Like I said, I've tried to.
So it's been good for you. Because so sometimes what we have to do is new circumstances make us stretch what's our default setting and what we normally do, and it's probably made you a better scalper because you have to look through a telescope once in a while. That gave you better areas, or even gave you more confidence in your short-term zones.
Yeah, I mean, mostly the gentleman was asking, he's correct. I mean, mainly I scalp or short-term trade, but I do try and look at the broader picture, and I actually take in like one of the things that we cover in the first half hours. We start out the show because it's 2 hours long. Cover the technicals from overnight in these pairs that you're seeing here. I think you're on my screen where you're seeing the.
Yeah, we have it up here.
And this is my long-term setting. I don't use 4 hour charts. I feel I get better signals using the 2 hour charts. And then I drop on down to 30 minutes with some exponential moving averages on that, and then I drop down to 5 minutes. And but what we do is we generally will cover the news overnight, or as we come into the day, to see how that sets the theme, or if any economic reports, and how that sets the theme, how the market will look out not only for that day, but maybe for the next few days. So I do go in and look at not necessarily fundamental news, but I look at the economic reports and what the perception was going into those reports and how that sets us up where the market's going to go, and then I use the technicals to try and move in and out of the market.
Okay, was that a shift for you? Because I know, Blake talks about if you just trade charts, you're missing half the picture. And, he has a lot of his biases are based on fundamentals. And, I have a saying that, people who buy headlines today sell newspapers tomorrow.
Yeah.
But has that integrating fundamental analysis been an edge for you? Or you always did it?
Well, I mean, I tell people I like to pair a story with the technicals. So I don't go just on the headline, but I go by how the market's going, let's say over the course of, 2 weeks, 3 weeks, and how the market adjusts to that headline. I'll give you an example. Let's say that the euro was wildly bullish or the euro's been technically bullish and the news is kind of bullish. And then we get this news that should be construed as quite bullish, and then you see the market go higher to gun a few stops, and then just kind of slows down and hangs around. I'm thinking, well, God, if this is the best you can do on a positive structured market and very good news, then I start looking for short setups, because then I look out and I say, what's the next news that's be coming out? And I'm talking about economic reports,
Right.
FOMC, ECB, and I'm thinking, you know what? I don't see the impetus for us to go much higher. And then I go and look for those setups. Like a couple of weeks ago, I was telling people, 2.5 weeks ago, I was telling everybody I thought we're going to get a big run up in the dollar yen. And we were trading it, actually at the time when I said on the other webinar, we were trading at 109.08. And we slipped down to about 109.02. And I said, hey, look, we got some support at 892 and some more at 882. And I was talking about how the dollar yen and I'll show you exactly where we were at the time. And I'll show you, this is the way that I trade. And what I'm looking for today is 1279, and that confluences with 1269 being the 61% of this entire move of 813 to 1551. And so what I like to go by is, I'm not that much of a trend line person. I'm not that much of a pattern person. What I go by is the levels, and
Yes.
I try and increase the probabilities by using a Fibonacci. And what I do is I go by price structure. Quite often, I got a lot of people that I talk to looking at the ZBs now, because when we were talking about the dollar yen on the way down, I have my own little saying. I go, it's all about the ZBs. It's all about the ZBs. And so we talk about how you put a dollar yen chart and a ZB chart, 30-year bonds, and how the market would, move back and forth based on that. We even have, when market's really trading pretty hot, you can actually day trade it, scalp it, using that same idea. But what I was talking to people back then was when we were down here at 109.08, and I was telling them, hey, I'm noticing something. And I had noticed it over about the last week and a half prior to that when we started to move higher. I said, what I'm noticing is the bonds are starting to move lower, which has an inverse relationship with the dollar yen, but the dollar yen doesn't care. It's like, I don't care. I'm not going to get fooled. I'm not, and it stayed weak. And so I was telling the people in the room, I said, hey, look, I think we're going to start to see this change. I think we're starting to see the first signs of it. And I think that we're going to take off in the dollar yen. I have a stretch target at that time when I heard Nick talking, and everybody hated the dollar yen at that time. I have a stretch target of 1075. This is where I was coming with this 1075. I like to go with the most touches. So we made that run up here close to 1050. We sold off pretty good, and we came up here. And finally, the dollar yen started reacting to the moves in the bond market. So I do use correlations, but not correlations as a definitive type thing, but I use them to see if the market's matching up, and the dollar yen and the 30-year bonds match up very, very, very well.
So you actually saw the correlation out of whack, and the yen should have been making new lows, but it wasn't, and that was your market tell.
Well, you're right in the most part, is that I saw that the dollar yen at the time, that when the bonds would start to move higher, the dollar yen wasn't, at the time when the bonds would move lower, the dollar yen wasn't moving higher. And I said, hey, something's wrong here. Now, 2.5 weeks ago or 2 weeks ago, I told people I thought we were going to rotate lower here in the bonds. I go, this market is, and I don't use, I forgot what the name of that is, where you compare technicals, patterns in price action in one market, and you say, oh, that means that the corn market is going to do this. No, but I said that the price structure was very similar to the way the gold market had done and went lower. So I said, hey, look, I think we're going to get a top here in the bonds. And I told him, I go, I don't think it's a top, I go, but I think it's a correction. And I thought my ultimate target was 5103, but we had here the 5125, 38%, and the 5121, which we did get to 5121. And so I was telling the people, I go, hey, look, finally the dollar yen started reacting to that. And I think what happened is today is more about positioning, or has been. So I told people when we got up here, we were live when I told people, here's my level, 1066. And we had 1080. I think 1080 was like the 1180 was like the 50%, I believe it was at the time. I was trying to hopefully get a few more nickels out on this thing to squeeze it even harder. But we saw the market go and break. And I was telling people that, and I was explaining to them today in regards to the FOMC, that I think a lot of people got short here in this area. And this is why I told you about is I like to use price structure, and I like to, look at the bonds, let's say with the dollar yen. And they got short and thinking, okay, this is it for the dollar yen, because we've been, just like Nick was saying earlier, everybody hated the dollar yen. So if you rally up, 300 pips or 350 pips off the lows, surely you're going to see a correction. And surely that's probably going to take us down here to about 1025. So people are licking their chops, getting short. And so I kept telling people, I go, I think there's one more high here in the dollar yen. I go, I just don't think it's going to stop. So we rallied up here. It just comes back down. I'm like, okay, well.
So based upon what you said before, you have some numbers up at around 12.
Yeah. Here's my numbers here. Yeah, and I was just
we could pull back to you think we could pull back to your pivot of 110.70 or so? Your initial target?
I'll show you how I play that into, and I think that could be a possibility, and I'll show you how that plays in. And you can see the significance of 1279. I'll show you right here, which I go by the levels. You can see here, and I tell people, I try and show them, I'll give you an example right here. Let's see. So you can see that the market, after it rallies up here, get past this 1279, where do they find support? Here at 1279. Then, and people who listen to me know what I'm referring to. I go, then you see a real good battle zone here, 1279. Bulls and bears really going at it left and right. We falter, we fall back, and we rally back, and where we run into resistance at, 1279. What I always tell people is the market never forgets the levels. And people know I'm all about the levels. And when I first started trading, I was drawing all these trend lines, left, right, this way, sideways, upside down. I don't go with the trend lines that much. Now, I did see some of the stuff that Steve had done, see some stuff Nick did, and they're doing it on a longer-term basis. Yeah, I will pay attention. And if it's something that's significant, just like I saw here, I'll draw it. But you can pretty much see I just don't have like trend lines. Most of mine are horizontal. Because I say the market never forgets the trend lines. Never forgets them. So you can see here when the market broke past 1279 on this run up, it was blue skies ahead. Okay? Right. And on the sell down, where did this market find support at? Well, they found a pretty good battle zone once again at 1279. I like that. Battle zone. So I think that 1279 is where the market can go to. I've been talking about it for 3 days almost. I've been just saying that. I thought we'd give up 1211 yesterday. I said, hey, look, I got this area here. It's a 61%. I think we're going to go in and go there. Now I'll show you in reference to what I was talking about earlier is people got short. And I think right now what's happening is more about positioning than anything else.
So we're still squeezing shorts now.
Yeah, exactly. But what happened here is I don't think as much as squeezing shorts as the market is going, and I'll explain what I'm talking about. So these people got short, and I kept saying, I think there's one more high, and it came back here. Well, I think there's one more high. Now it came back down. And I told them, I go, my stretch at this point is 1211. I go, but I go, and when we were talking, we were coming into Golden Week because the Japan's closed for 3 days. I think these people got taken out of their shorts right here, okay? Yeah. So at this point, anybody that got taken out of the shorts and said we're going to go lower, like I told people, given the battle zone example analogy, if you're defending this line and then the forces overrun you, you retreat back. You're not going to retreat back 200 yards and then try and defend it again. You're going to say, no, I need to come back much further and find out where I'm going to make another stand again. So I think today with the FOMC coming up, Golden Week, the market has just been free to go higher, and no one's fighting it. Okay, I don't think shorts are necessarily getting run over. No one's fighting it, and what they say is, well, because it's, sometimes people will say, you got too many lines on your charts. I go, look, because some people say, well, if you take out one line, obviously eventually you'll get right. You don't understand. The market trades on levels. It moves from level to level. Once we break out of one level, they're looking at where's the next key level, just like we talked about 1166. So what I'm looking at is I don't try and say, Dale, we're going to 1189. From there, we're going to stop. We're going to turn around. Look, I'm just looking at the levels. And when I look at, let's say, where the 30-year bond is, or I look at what the dollar index is, or wherever, do I see the market's matching up where potentially from a probability standpoint we can run out of gas or whatever. So we got up here to this 1211, but I told you I like to use a 2-hour chart. And I was pointing out to people, I go, look at this. I go, not only did we get to 211, we closed solidly on the 2-hour bar above 1211. That told me we were going much higher because, like I said, to me, it's all about the closes on these bars.
Nice candle. Yeah.
Yeah, look at that. It's went over solid, and 1211 was a very good level if you take a look at this. So look at that. It closed above the prior closes on one bar straight up. So I said, this market's going higher. Where's it going to go to? So then that's where I did the work, and I said, hey, look, it looks like 1279, 1269 being the 61%. And so as we moved higher, I think, like I said, no one's going to stand in the way of this market. We have FOMC. Now, I do combine some fundamentals. When I look at the FOMC, one of the things that I was covering in, I was mentioning to the people today, and I'm in agreement with Steve Volge. I think that the dollar, it's going to be negatively, construed, or what they're going to go on and say is going to go.
It'll be dovish, or not hawkish anyway. Not hawkish.
Exactly. So one of the things that came out, and I was comparing some news on just general news, and we know that the data's been coming in soft, and it says weak U.S. April auto sales data released on Tuesday added to the recent worries about the outlook for the U.S. economy, which grew at its slowest rate in 3 years in the first quarter of the year. So, and I do trade on technicals. I don't trade on fundamentals. But what I was telling people is, don't forget, this is, okay, earlier this year, we had people saying the Fed was going to raise 12 times this year. I mean, that's an exaggeration, but not much of an exaggeration. We had 4 times, some people saying 6 times. I thought it was the stupidest thing I ever heard of. Look, for the last few years, everybody was throwing tomatoes at the Fed. They're never going to raise. They're never going to raise. They'll never raise. They're never going to raise. So the Fed, right or wrong, however y'all want to perceive it, they've done a great job in the sense that look how the U.S. economy has come about. So back in the old days, the Fed used to go and raise 2 times, and then they would just pause, because the idea was it takes 6 to 9 months for a raise to get into the economy.
Yeah, do you remember that? Do you remember that expression, Paulie? 3 steps and a stumble.
Exactly. There you go. So
yeah, and we've had 3, right? We've had 3.
So, well, we had the one. Well, yeah, but we had recently
a year ago.
December, and then March, and people thinking they're going to raise again in June. They're not raising again in June. That's not the modus operandi of this Fed. So what we've seen here, though, is if you look at the dollar yen, look at that. It's even on its highs right now, and it's not backing down. They're not. Look, what's happening is anybody that's thinking about getting out, they're just looking at where's the next target. That's it. They're letting it run. Where's the next target? My thinking is, and I'm just piecing it together with the bonds. Now, the bonds did go. They've actually started to rotate a little bit higher. They came up to the 38% and got knocked back. If the message is a bit dovish, or not dovish, but the idea is that they're not going to go in and raise. And one of the things that they were notating is at this last meeting, it said in March, the FOMC made some small tweaks to its inflation outlook. With headline PCE inflation having risen close to 2%, the FOMC indicated it sought a sustained return to this level and was carefully monitoring inflation for its symmetric 2% goal. Well, what happened was since then, the PCE inflator came in and it slowed to 1.6%. So the Fed was saying, even if we get to 2%, we don't care. We want to see sustained inflation or a sustained area before we do. Well, now we're going in reverse. So there's no rush for the Fed to do anything. And on top of that, we actually receded to 1.6%. So when I look at those things, I don't trade based on them, but they allow me to come in at certain levels where I feel I'm looking for the market to fail or hold. And if I see that, then I'm thinking, okay, well, I got something, it's basically like going out and I get ready to go out for the day and the weatherman says it might rain. And I go out there and I kind of smell some moisture in there and I go, okay, I'll take an umbrella. There's no guarantees, but I'm putting the probabilities in my side. So when I look at the bonds have already held up really well. What kicked off, when you're thinking about why did these people get stopped out? Why did it make this leg up? And you wonder, well, how did it make this leg up here? I guess people were just whatever. No, what happened was the bond market, which I thought was going to come down to 51.25 to 38%, it came down to 51.30 and it popped back up. It came back down again to 51.28. Still didn't come up because I had 51.21 as support, confirmation at 51.25. Where the market got kicked in the rear end, or kicked in the front end, if you want to call that, was when Treasury Steve Mnuchin came in on Bloomberg and said issuance of the ultra bonds would be a great idea. Okay, that sent the bond rates rallying, bonds tumbling lower, and that knocked these guys out.
The third time it went to your number.
Yeah, well, yeah, it did. But the key thing was that not only did it go to 1211, it closed actually above 1211. So you see the last significant, look at this last significant high right here. That was right there at 1211. It stopped the dead in its tracks, and it fell down to here and then rotated lower, new lows. This time we closed above 1211, and that's why I was telling the guys to go, it's going to go higher. It's just going to go higher now. And even when the bonds rally, the dollar yen didn't even come off that much. And that's what I'm saying. You're starting to see this difference. Now, as far as the dollar yen, I think this message, the text is going to be dollar negative, and then the NFP isn't going to expect it to be that strong anyway. So I think we can now start to see this market pare back. How much we're going to have to pare back, we'll go in and see. But I think this is about, as my dad used to say, I think that's all she wrote at 1279, because you can see the significance. Doesn't mean you can't get above it, but what you're looking for is this market to get there and then to basically run out of gas at that point. And you can use that as an area to exit out of your longs. Some people that might be super, ready to go for it. You can look for shorts here at this point here at this 1279. You may want to let the market finish out the day. We know that you don't expect a lot of action in Asia because Japan's on their 3-day holiday. So now let me get here to the euro. And I think in some ways it's similar in some ways, but the same thing, like a lot of people got pounced on this one. This came to a 61% here, and the market started to rotate lower, and we rallied back up. And at this point, it looked like we were going to 807. I thought we'd go to 807. And then Friday came along, and I was talking to some fellows.
Draghi, the day after Draghi said inflation is not a problem in the Eurozone, they got a hot number.
Yeah, exactly. And I was telling I'm glad you brought that up, because I was telling the guys in the room, I said, there were people that were coming in short right in here because we got below 9. And I said, let's wait till the number comes out. Wait till the number comes out. The number came in strong, and I took a scalp short as it rallied up. I was able to get out with a scalp, and then we rallied up to like 933, I think it was. And actually 935 at that, or 37. I took another short. We dropped down, but we got even higher. I'm like, man, this thing looks like it's going to go on and finish up strong. But I think we stopped out a lot of people in here. Now you see the market's trading in a very tight range. I think the euro can go higher, but I'm not so sure that it's going to be sustained. And when we look at this over here, you can see the significance. Just like my touches always tell you, look at the rally up, and it runs out of gas at 991. And pulls back. Once it gets above 991, it's blue skies ahead, okay? So when they come back on the way back down, where do they stop at? 991. Again, we rally up on the U.S. presidential election, and then once we go through 991, the wheels fall off the caboose. So you can see the significance of the 991.
Great pivot point, yeah.
Yes.
I'll try a short up there.
Yeah, exactly. Here's the reason why it's not, and here's the tricky thing, but my thoughts are, and I was telling people, once these people got knocked out of the box here, I said, people are going to say, I'm not coming back. I'm not going to play anymore. I have no interest. Call me when we get above 961, or call me if we get above late 61. And you've seen this, the market's traded in a very tight range. Here's the deal, is that 2 months ago, and I was telling people I thought the euro could go higher, and I said, look, I think the next move is for the dollar to go lower, was because 2 months ago we got the best European PMIs in 5 years. And that was followed up last month by the best European PMIs in 6 years. So then you started seeing all these banks, adjusting their forecasts, and they're looking for 113, 114 euro. And people probably thinking, I was telling the people, you're probably thinking, what the heck are they talking about, 113, 114? Because you're seeing these interest rate differentials now.
Right, nearly.
Yeah, and so the U.S. has had a strong economy, but now it's the euro that's now taking the baton. And so when you look at interest rate differentials, one of the things that hurt people in the last ECB meeting, people got fooled, was it wasn't what Draghi said, it was the text that came out. And the text that came out said, we'll still use all our tools if necessary. You're like, use all your tools. Why would you use all your tools? The Eurozone economy is really taking off. So the people that got long got kind of like knocked out of the box on that. And so I was telling the people, I go, any rallies they're going to sell into. And sure enough, we looked at the 925 and 930, and we ended up selling off from that. And Draghi he was actually conducive. He was saying, yeah, we must still worry, but yeah, there's some growth. The guys and gals didn't care anymore because they had already gotten kind of stung by the text that came out. So like I said, obviously we've rallied up, but my concern is if we get above 961, and we're able to sustain that, that's where you're going and get new buy-in. But we still have the NFP. I don't think the NFP is going to come in strong or anything like that, but people will take some money off the table on a run up just ahead of that. So we may not see it necessarily today, but I think we've seen it before where a market holds steady, the euro, and then by Thursday evening, you start seeing the market pull back, and as we roll into Friday morning, it's already given 40 or 50 pips. So if you're looking at an area, I think it'd be the 991. I think that we're eventually going to go higher in the euro, and I think it's going to be as the U.S. continues to slow, people are going to have to take June off the back burner, and you're going to see those, what they call the interest rate differentials. And I'll give you an example. And
continue to narrow. Yeah.
Yeah. Okay. Well,
so you're probably tracking the bunds as well then, if you're looking at that.
I don't follow the bunds that closely, but I'll tell you what, we all learned the most from our mistakes. I remember, this was years ago, I remember the Europe trade at 124 and 124, 125, maybe 126. And I had a conversation with Mark Dow at that time, and I was saying, this economy is so sorry. The unemployment is terrible. It's going to go down. I'm telling you, I don't care what you say. It's going down. It's going to go down 112. And he goes, it doesn't make any difference. He goes, it's the flows. I go, what do you mean the flows? He goes, well, and he goes, the interest rate differentials. He goes, it's the flows. You're not going to be able to stop. I go, I don't care. This economy it's crappy. I'm not saying you don't know what you're talking about, but this employment is going to get worse. And you know what? The euro kept going all the way up.
Yeah, Mark Dow is a sharp cookie, man.
Yeah, it went to
Donald Trump stuff.
So you can't fight the flows. I learned that some time ago, and I was telling people when gold was rallying higher, and I go, you can't fight the flows. Only the flows in different ways. So it can be investment flows, or in this case, the flows moving into those. Because don't forget, the eurozone bonds were so bad, and now you can now start to buy them, not buy them, but I'm saying you're going to start to see that differential as they start to where the boon, like you said, the boon had gone so low, and now it's basically reversed. You're going to see this widen out where it makes sense. I mean, where the euro itself is going to take advantage of those flows. So in that sense, you can't help but the euro to continue to gain. And as you see the economy get stronger, I tell people it's not so much the euro, it's basically you have to reprice the valuation of the euro. So on a very short-term basis, yeah, I think that we can go up here towards this 991 today. I don't know if we go all the way to 991. We'll probably see it then rotate lower, but then I don't think you'll start to see the real move starting after we finish this week. Next week, then that's where we'll probably see the euro eventually go higher. At that point, Voley was saying, I heard him, and he's right. The dollar index is just barely hanging on here. If you look here, it can go much lower, but my initial area is 98.53. But yeah, we can tromp on down here to 98.17 without any problem.
Yeah, Nick's looking for she has a harmonic around 97.70.
And
Paul, you also got some credit from Dan Norberg's a big fan of yours. He talked about you being bullish USD CAD, and at 33, and I have to say, Paulie, that maybe my memory isn't serving me well, but I think it is. And the difference in your analysis between now and a couple of years ago, and the conviction that you speak with now, is really amazing. Your confidence has grown. This was a great interview. You gave us some very good looks and levels to pay attention to, and rationales behind it. And I'm proud of you, how you've really advanced as an analyst and trader, Paulie. It was great to witness this today. And go ahead, buddy.
No, I was going to say, well, thank you very much. I mean, I've found that And I guess that's for those people that just say, hey, I only want to look at the technicals, that's it. And you can't fight the technicals. I mean, you could, like I say, when I look at, and I don't look at necessarily fundamentals, I'm just looking at what I tell people, that economic news that may set the theme for the day, or how the market, how it's going to react. But ultimately, it's the technicals, and the technicals help you set the risk at that point.
So what are your hours for the show now? You're on 2 hours a day. What time does it start Eastern time?
7 a.m. Eastern to 9 a.m. Eastern.
Okay, so gosh, you know, people could come in and get like 3 hours of great programming like they used to do when I was at FX Street in Lar. It's go the morning edge and then come hang out with us. I don't think you're going to get any better content, and I think we have the 2 best rooms on the net, Paulie. What do you think?
Well, I think so. I appreciate that. It's a 2-hour show, like I said, from 7 a.m. to 9 a.m. and then they can roll into your show afterwards. But yeah, it's this dollar CAD has been something else. I do have a key level here at this 37.27 here. If you look, I'll find it right there. There's the 37.27 right coming across here. Can it scoot up to 37? Yeah, but you can see these 2 key levels right here. There. So I don't, like I said, I think that the I caught the break to 22, but I didn't get long down there. I thought there was going to be one more shot down to 31. So that's a great call that you made from 33. And you're thinking we're getting closer, maybe like I think 61.8 is 38.80. Nick showed earlier in the day, up towards that 139 level. Do you have numbers up there? Oh, you have numbers right here. One thing with the dollar CAD, one thing I started Joe talking about the Aussie dollar. This market with the Aussie dollar, once it gets going, and I've told people it trends and trends and trends, whether it's to the upside or the downside, and you just can't get in the way of it because it just keeps on going. Yeah. The dollar CAD, to a lesser extent, is similar to that, and I've been on the wrong side of the dollar CAD before. In the past, where I'm like, oh my God, it just keeps on going higher. You really have to wait till it hits these levels, and you have to see some kind of, I remember I think Nick was saying something about that, but okay, well, we got this thing, but we don't have confirmation yet. And you really have to see that here with the dollar CAD too. Now, on a short-term basis, yeah, we got a gravestone doji, but look, it didn't even give you that much. But today is going to be key. We'll have to see how we close them today. Well, say we go to 45 crude, okay? We take out the 47. That should take it up there, don't you think? Yeah, because crude just dipped down to 47.30, and but I mean, crude's pretty oversold at this point. Not that I'm saying we're going to get some kind of a bottom or anything like that, but we're pretty oversold. Yeah, we saw a lot of funds have exited out. Basically, they've thrown the towel. So no one just turns around and steps in and buys it at that point. But I think we kind of hit a washout area here. The one that has surprised me a lot, I have to admit, has been the cable. I don't know how much time we have left, but you can see here since the beginning of April, we've rallied up almost 700 pips. Now, generally, April is a good seasonal period because of tax receipts. And May generally is the counter to that, okay? So usually seasonally it's weaker, but this thing is held up like a champ. But we'll have to see how things go, but I have to believe that this thing is going to eventually have to go and work lower. It's hanging around here. The key is going to be a short towards 130 is my guess. I have a level right here at 29.91, and we can back it up. And you see right here, you see right there with that 20, you got a couple of touches right here, support and then resistance. That's the only thing I can see. I just don't see now. Once they get past that election, here's the deal. They think that what's her name, May, and the Conservative Party are going to. I saw the Reuters poll. They think it's going to be a landslide. So once you get up here, what's left? You see what I'm saying? What's left to propel us higher? And the people that were on the wrong side, they got smoked out. Well, they're not going to buy. They're already out. They're gone. And if you're long, well, it's not like you're going to add on. And in order for this market to move much higher, you need brand new buying. I just don't see where the impetus. Yeah, why can't we go to 130, pull back to 127, then trade 135? You know what? That sounds perfect to me. It does. So from one host to another, Paulie, this was the interview of the hosts. You know, at least we don't have to bring anyone a cocktail as a host. We just bring them compelling, actionable
ideas every day, and I'm proud to call you a contemporary of mine, and wish you continued success in your role as chief host now that Moses Morrow is over here of the Morning Edge. And looking forward to Blake coming back next week and parting the Red Sea. And Paulie, really a pleasure talking to you. You are a top gun, my trading warrior, brother.
Oh, well, thank you very much. It's very kind of you, and best of luck for everything, Dale.
Thank you, man.
Well, you have
All
a good
right,
day.
good luck on the Fed and NFP this week, buddy. And let's do this again down the road, okay, bro?
Well, certainly. You have a good day yourself.
Thank you, Paulie.
All right.
Have a wonderful day for me as well. It's Steve.
All right, that's everyone. That's Paulie Franco. Catch him on the Morning Edge show. If you can post your link to your show, people are asking for it, Paulie. I don't have it. And
I'll have to go. I'll go in and find it.
Okay.
To post it in there. I know one guy used to post it every now and then. So.
And you can find him on Twitter at SPZ_trader. SPZ like Spoos_trader. So that's going to be a wrap. Thank you, Paulie. Thank you, Steve Volge. Thank you, Nicola Duke. Thank you, Stelios.
Thank you for having us, Steve.
Thank you, F.A.C.E community. And I have another good guest tomorrow. Dana Lyons is a great technician. He's more on the stock side, but he's also a very elite analyst. And I'll see everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. And thanks for spending an hour and a half with us today. Adios.